So it's been, I mean, there's been that theme at the market, liquidity squeeze, and the CBN is unrelenting with all the mop-ups. But this week we're expecting some inflows into the market. Let's start there. What level of liquidity inflow are we expecting at the market? Okay,
so first of all, we expect that the FAC is going to come in this week. About 314 billion is expected, 312 billion is expected to hit the system. We have a maturity for OMO auction where we expect 190 billion to come into the system.
Okay.
Then again, we expect that the CBN will continue with its tightening stance and come and mop up the liquidity. Okay,
so when we have that back and forth, cash coming in, going out through the mop-ups, how is that impacting on rates? Where are we seeing rates now?
Okay, so we've seen a steady supply of securities from the CBN, so there's no pressure on the supply of CBN. However, we've seen a lot of rediscounting at the short end of the T-bill curve.
Okay.
So we've seen a mixed market there where we see rates trend up to the higher 14s and then lows of 13 when liquidity comes in, cash liquidity comes into the system.
Okay. For tomorrow, the first bond auction, we're going to have that on Wednesday. Am I correct? Okay. So what are your expectations in terms of, kind of 150 is on offer for the month?
Across three tenors, 50 billion.
That's a 5, 7, and 10 year
yes.
maturity. So what are your expectations?
We expect that we're going to see rates closing about 15.4, which is the current levels at which the bonds are trading. We also have a PMA auction tomorrow where 254 is on offer. And we also expect that the rates will close at the current level where we've seen 15% at the 1 year.
Okay, because I know that, I mean, at the bond, or was it the bond auction, effective yield, we're seeing effective yields as high as 17%. Is that still going to be?
You mean the T-bills? The T-bills, yes. The T-bills,
yes.
So 15 discounts on the 1 year, 17 yields.
Effective yields, okay. Yeah. So let's go on to the FX market now. I mean, we've seen stability, predictability, but now with what's going on, I was talking to an analyst yesterday with what's going on at the political scene, the suspension of the Chief Justice of Nigeria, and we saw those inflows coming in from foreign investors despite, the risk levels. But now it would appear that the political risk might be heightened compared to what we saw before. What are your thoughts on that in terms of how that could be impacted on investors' perception?
Right now, we've seen some interest. We've seen continued interest from the FPIs.
Okay.
We hope that they will come in tomorrow with all the auctions we have. For the elections, this is not the first time we've had election, and the last time we had an election, we thought that it was going to be all very, there's going to be
put everybody on of course, on the edge.
But that has happened, and nothing happened. So we've seen them really weigh their options, and really, this is the best time for them to really come in where rates, you can get a 17% yield on a 1 year T-bill curve.
Now, back to the fixed income market. Now, the Senate recently talked about or expressed concern about the level of borrowing, especially for the foreign debt. But the federal government insists that, look, we're still within the borrowing limit, at least as far as foreign debt borrowing is concerned. But then there's the bigger issue of debt servicing to revenue and how that is going to impact on the books, on the budget, of course, spending on revenue for the government. They say, what are your thoughts in terms of how you see the federal government managing, staying within those acceptable levels, and also servicing, dealing with debt servicing? I mean,
if you notice, coming in this year, in December, there are some repayments on the T-bills. So I think they're actually really watching it, and from time to time, they offer less than is maturing so that they can actually have some repayments. So I think they have an eye on it, and they have some sort of control over it.
What about Eurobond market this year? What do you foresee us going back this year, or do you think that, with what we did in 2018, that may be sufficient for now?
We're still looking at the budget. We've not had clarity on what the government has to do. So I think by the time we have the clarity of how much the government wants to spend on infrastructure, then we'll know if they want to go back to the market to borrow dollars.
Okay. Now, finally, at the T-bill space, we're seeing effective yields at around 17%. Do you think that for the first quarter, let's talk about the first quarter of this year, do you think that even with taking into account the elections and after the dust settles, we would remain at those levels, or do you expect that we could go higher, or there's a chance that it could actually go lower?
Okay, I'll explain it. There's sentiments that we'll still see an uptick of yields just before the election, but what usually happens after the election is everything goes well, we'll notice some moderation.
Okay. Yeah. Chioma, we'll leave it there. Thank you for talking to us today. We appreciate your time. Chioma Udu, FX dealer at GT Bank.